week's Traders Unplugged. Joining us from the floor, CME Group, Alan Nuckman and James O'Malley. Good to have you guys here today. Topic number one, because we are good to go. Are you a bull or a bear, and what could possibly happen to change your mind about this market?
I'm not going to give up on the bull run until all the bears finally give up and want to be buyers.
Right, so Alan's talking about a price action approach here. I want to look at something a little more fundamental. I am also very bullish this market. However, we do have this debt ceiling issue coming up. September 20th is the deadline. The House of Representatives voted today on which creditors they would and would not pay if they hit the limit. So I don't think there's any chance of a halfway civilized agreement being reached by the deadline.
The politics of this are nonsensical in the first place, but I want to put a spin on this. We've got to remember there's a lot more upside left in the stock market because the VIX as it stands right now is low, but it's still 25% above where it was in 2007. So the VIX can go a lot lower, meaning the volatility can get a lot less and the stocks can get a lot higher.
Topic number two, thunder down under. George Soros is said to have made $60 million off the Aussie dollar. What currency would you buy?
I'm not looking to buy any currency right now. I think the best trade out there is the Aussie dollar short. I think the Aussie is the new yen. We saw the yen get hammered today. I think that trade's getting crowded. The economy in Australia is faltering. 10% of their GDP is tied to mining. They have reduced consumer demand. They're going to have to continue to ease. They cut the rate from 3% to 2.75. They're going to have to step it up and do more. The Aussie is going lower.
This is 7 cuts in 18 months. Theirs is the only economy that didn't get impacted by the fiscal crisis. But I think a better benefactor would be Canada. The Canadian dollar has gone above 99.50. Near-term target, if it can get to 101, is back to 105. So I think oil, materials, Canada.
Topic number three, short-sighted fund managers say they don't like Chipotle. In fact, there's some shorting going on. Is this a stock that you would short too? Are you biting?
Well, shorting the stocks is a dangerous game because you can get in that squeeze. I'm not a big fan of Chipotle as far as the burritos go or even the stock because it's priced at $340 a share. If it had many options like Amazon or Apple, there might be different ways to play it, but I think I'm somewhat limited because it's such an expensive stock.
I think Chipotle is getting ready to test those recent highs. The stock hasn't traded in bearish territory since November of 2012. I like the stock here. The space is great.
It's still burritos.
Fast casual dining is growing at 13% year over year. Compared to fast food, which is only 3%. This
like
is a
the
growth
analyst
stock.
said, their biggest competition is a taco truck that pulls up in front of their store.
Let's take a look at our bonus round question for today. The question is, which country spends the most on Mother's Day? Is it Brazil, the U.S., or France?
U.S.
Yeah, I have to go with U.S.
It's Brazil. Wow. Happy Mother's Day, and thanks for being on the show today.
Thanks, Angie.
Thank you.
First Business continues right after this.